If you're an agent looking at a captive opportunity, maybe you've been pulled into an opportunity meeting. So they say, I'm going to share with you some things that they're not going to want you to see. Four things that you're never told in most cases about the captive insurance agent opportunity. A lot of times they'll bring out the flashy things, the fancy watches, maybe the cars, and tell you their little story from rags to riches. But these four tips will save you so that you don't feel like you got robbed down the road. Now, before I go into this, my name is Jason. I'm your friend in the business, and I do partner with amazing brand new and veteran agents alike, selling shoulder to shoulder, life, Medicare, and annuities, face to face, but more importantly, in the telespace. So free resources always for your taking at jasonfinalexpense.com. And I thank you for joining with us in this content today. I hope it's a help to you. So first off, not all captive agencies are bad. Let's put that out there. There's some good ones out there, but in most cases, let me share with you, this is the cause of frustration and insurance agents just throwing their hands up. And it's number one, the vesting schedule. They were told in the opportunity meeting that the vesting schedule was, wow, you're going to go build your business. Come build a business with us. Wink, wink. And you found out that the wealth that you were building wasn't for you. It was for the company. It was for the corporation, your manager, your upline. You're building a book of business for someone else. And this is a sad thing that happens to a lot of captive life insurance agents. They didn't look at their vesting schedule. And then they found out it was a 5-year, 10-year, some cases a 15-year vesting schedule. This is like that old story back, all right, in church when you were a little kid talking about working the fields for so many years for this beautiful woman. And you get to the altar and lift the veil. You're like, whoa, whoa, wrong person, man. And then you had to go work again to get the right lady. A lot of times this is what happens to captive insurance agents. They join a captive opportunity, so they say, and they then look down the road and go, wow, this isn't so great where I'm at. I'm going to go bounce over here. Now, this block of business, all these great people that I've protected, I take them with me, right? And they go, wrong. Have a great day. They kill your email, they kill everything, and they go, see ya later. And what happens is this is a sour taste in a lot of captive insurance agents' mouths because they didn't know about this. They didn't know that the money that they were building wasn't for them. It was for the company, the corporation. And this is so bad when you find this out on the backside. You need to know this transparency on the front side. And I'm going to give you 4 tips in totality today. So I hope you're taking notes if you're debating or deciding if the captive insurance opportunity is truly everything that you desire. So number one, vesting schedule. Make sure you look at this. If it's a 5-year, 10-year, 15-year vesting schedule, ouch, run the other way. Normally, this will rob you, my friends, because everything you're going to find that you're building is for your manager, your upline, the corporation, and you didn't even see it because it was buried in 20 pages of the fine print. So your vesting schedule, very, very important when you're looking at joining and partnering with any agency, even an agency like ours at jasonfinalexpense.com. You need to own and control your block of business. You need to either own it day one, or if you're with another agency, you need to own it very quickly. It should not take you 2 years, 5 years, 10 years before this is all yours for the taking. Because let's say you work for 2, 3, 4, 5 years and get sick, you want to make sure that all of that money is truly yours so that when, let's say you're like, I'm just done with insurance. I've done this 5, 10 years. I'm going to go retire now. All that money comes into your pocketbooks, where if you're not vested, you decide after 5, maybe 10 years, you're not fully vested. You leave that corporation, all those dollars stay with that company in most cases. Be careful. Look at the vesting schedule. This will save you a lot of heartache, my friends. Number 2, with captive insurance opportunities, so they call them, you've got to understand that competition is very important. And when you jump into a captive environment, you're captive, right? No different than, let's say, a dog in a cage. You can't be free. And when you can't compete, you're going to retreat. You're going to find that you're going to be robbed of opportunity that independent insurance agents will just get excited about because maybe your corporation can't take card business. Maybe the company that you represent won't take certain risks like oxygen or COPD or congestive heart failure. Maybe COPD is graded and we can give them day one, which we can, by the way. Maybe someone with a dread disease or they're overweight. Maybe you can't do anything for them and we can come in and give them day one coverage. Competition is important One is none in this environment, and two and three and four is one. Let me tell you, it's amazing. We're going to win that fight when we can compete with so many different, just amazing resources to help really protect the consumer. We're in their best interest. But a competition for a captive insurance agent, they don't know any better sometimes. And you've got that power of one. Sometimes you can only sell blankety blank life product and you don't know any better. So you just have one. You're really excited. You're doing the good work first off. So not going to disparage any of you. You're doing the good work, but sometimes you're just not as competitive. So when you come against another agent, you don't come out on top. And that independent agent, in a lot of cases, gives you a chargeback because they're charging the client, the consumer, less money for more death benefit. They just gave them more coverage. So who would you go with? Are you going to buy a Heinz bottle of ketchup at 7-Eleven, let's say, for $6 a bottle nowadays? Or do you want to go to the other grocery store with a coupon and get it for $2.50 on sale? Clients look at buying life insurance or medical insurance or long-term care insurance or even annuities in the same way. Do you want to go with someone that gives you a 14% bonus on an annuity or somebody that gives you 2? It's a pretty easy decision to make, and competition helps you capitalize at a higher level. So a captive insurance agent, they're locked down. They can't even talk about these other opportunities that are true opportunities for the consumer. This is all about being in the best interest of that consumer in their corner. And the better you help that prospect, the more paper that you will hopefully make because you better protected them. But competition is king. And captive insurance agents are locked down. They're kept into an environment where they can only offer one or a very small families of companies, very small little block of companies, because you are in an environment where you are a captive insurance agent. They do control you. Tip number 1 in the vesting schedule. And number 2, they control you in the way of competition. And you're not going to make necessarily as much wealth if you can't be as competitive when you're out in those homes helping great people. You're still doing the good work. And back in the day, I used to be a captive insurance agent. So trust me, I know all about this stuff. And it's like, wow, the world opens up for you when you can take someone with dread diseases and give them a dynamic level of coverage. This levels up your game as you get going. But being a competitive insurance agent is not bad if you've got a good product that undercuts other people. But this is very rare in this circumstance. So competition. Tip number 2, please take this to heart. It'll hopefully help you in your decision on if you want to be a captive final expense insurance agent or an independent final expense insurance agent. It doesn't matter if you're an in-person agent or a telesales agent. All these tips apply the same. So tip number 3 is the non-solicitation clause. You've got to watch out for this. It's like talons getting into you. It hurts, all right? This hurts in the vesting schedule when you found out that the opportunity you were building wasn't for you, it was for your manager, your company. Number 2, you found out that you weren't competitive. You just couldn't win in a lot of the fights that you're going to face, and you get more chargebacks. Number 3, you're going to find out that a captive insurance agent is kept locked down by a non-solicitation clause, meaning that all these clients that you're selling, you can't go save them. You can't save these people when finally the blinders are pulled off and you realize, oh no, I can give them way more coverage for less money a month with this other company. And oh, by the way, you may be only getting compensation at 30%, 40%, 50 or 60%. And you got to build yourself up to maybe 70%. And then you find out you could join an agency where you could attain 100% or more compensation, selling maybe a better product for the consumer, giving the consumer a better handshake, and you as the agent getting compensated at such a dramatically increased level with the same 9-month advance. This is powerful for an insurance agent. So you find out you now have a better opportunity. That's a true opportunity where you're vested day one. You find out that now I want to be an independent agent, where maybe you decide I want to be more competitive to create a better environment for you so that the business that you're building doesn't get beaten up and replaced all the time. That hits you with chargebacks, meaning you have to pay back your commissions. That's no good. But tip number 3, that non-solicitation policy means all these people that you've protected, you can't even talk to them typically for a period of 2 years. And they do this on purpose because they know that they're product in a lot of cases could be overpriced. And the moment that the curtains pulled back, now you're like, uh-oh, I want to go save my mom and my friends and all these people that they made me do a project 100 on. I want to go back and help them because I can get them way more coverage for a better handshake. And then you're handed a non-solicitation clause like talons sinking into you that says, you got to wait 2 years before you can go talk to those people again. Have a great day. See you later. And it's like, wow, this just sinks this ship that you thought you were going to sail off into the sunset with, my friends. Be careful. The non-solicitation clause is something that really creates chaos for a lot of brand new insurance agents that decide to be captive at first because they didn't know any better. But compensation is powerful when you're moving forward in this industry. But compensation is good, but you've got to have the ability to capitalize on that compensation. And that comes with training, support, and mentorship. I mean, 100% of nothing is still nothing, and 30% or 40% in a captive environment of no sales is still zero sales too. So you've got to have good compensation, but you've got to have the ability to capitalize on that. But a non-solicitation clause or agreement is something that a lot of captive insurance agents put into their contract because they're trying to keep you locked down, and they know that once you realize what the real independent life insurance world, the independent annuity space looks like, you would never stay. You're going to go help that consumer because you're the most competitive force for the greater good of them. Now, there's some rare captive insurance agencies out there that have some niche products that are good, but another problem is if that captive insurance company changes their pricing structure, well, now you're in a bad place. If that captive one is none company decides to say, we no longer offer XYZ insurance, and that was your favorite insurance to sell, well, now you feel like you're screwed. That's no good. This happens to captive insurance agents all the time. Independent insurance agents, we're like, no big deal. We just bob and weave. If that one pops, we just pick this other one up on here. It's an A-rated top tier carrier to take care of our consumer. Oh, by the way, crazy good compensation. You can make 100% compensation and then some as a veteran. It's powerful, my friends. And I hope you're liking this content. They're not going to want you to be looking at this. So if you enjoy this content, feel free to like it. If you don't, put it down in the comments for me. If you could do me that favor. And thank you to all my subscribers who egg me on every day to give you more. So I appreciate you. I hope it's bringing you value. So number 4, this is foundational to you finding success, whether it's with a captive insurance agency or even an independent handshake like what we are here at jasonfinalexpense.com. It's support and mentorship. If you want to make more, it's so important that you have good, solid support. And there are some captive insurance agencies that have some pretty good support, but then there's others that are kind of the flat tire of the industry. You jump in, they tell you they'll give you mentorship and support, and then as soon as you get there, they give you nothing. They don't give you a 5-day telemastery program like what we do here at jasonfinalexpense.com. They don't give you everything they have. They don't give you ongoing mentorship and one-on-one support. Maybe you're going to find that you were shined on and told you were going to get some training, told you were going to get some translations, told you're going to be given X, Y, or Z, and then you're like, uh-oh, I'm just sitting here in a cubicle by myself banging numbers. That'll beat you up, my friends. So some captive agencies, though, do have really good training platforms and support, but other ones don't. So it's just like dogs. There's some good ones. There are some bad ones. You want to just test that, see if you like who is going to be your leader, your mentor, so that you have a chance of making the money. There's no shame in it being a captive insurance agent. I've got some good friends that still are captive, but let me tell you, their 1099s are not quite as high, let's just put it that way, when it comes to earning income because the compensation is so low and their offerings are just limited. Whereas an independent insurance agent, you are virtually limitless in how you can offer coverage, protect consumers, but also capitalize when it comes to compensation, when it comes to vesting and owning your block of business. So you're in the business for yourself, but you're not by yourself. And having financial gain, being able to infinitely take care of amazing people, even if they're on oxygen, even if they have cards, getting that 9-month advance and be able to build a business for your family so that you can look back and know that, you know what, everything I built was something that I own. Own and control your business, be the best in this space. And if I can serve you in any way, reach out at jasonfinalexpense.com. I appreciate you joining with me in this content, and I hope it was a help to you in either direction that you go. Have a great day, my friends, and we'll see you soon.